Good afternoon. Welcome to the Blue Line Metals Edge here for Tuesday, April 5th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. Haven't done a video here in a while. I just wanted to put one out for you guys, and maybe we could string on a few more here this week. But I wanted to identify one of the questions I keep getting is on the platinum market. So it's a lot easier sometimes if I could just address it in a video rather than individually calling people on this, which I'd be more than happy to do as well. But, if you're watching this on YouTube, be sure to like and subscribe to our page. We're trying to build this thing out here. Plus, there's a lot of good information on here. Bill Baruch, one of my partners, he does Midday Market Minute, covers a lot of the equities, stocks, interest rates, some of the macro markets and stuff as well. And then also Oliver Slope, he puts out a lot of good information on the livestock, the grains, things like that. And we've got just a ton of different videos here that we like and we post on here. So a lot of good information. So back to platinum. Platinum futures, they sold off a bit more today. And if you look here and we go into, if we go here on this home page here and you start looking at platinum. So this is the Blue Line Edge. This is how it defaults. If you want to take a demo of it, you could register for it. They do have some real-time quotes and charts. And then this is also programmed the layout for a client if they want to use this particular platform. So it has that quote board. They're all linked up to the chart, which is linked up to the trading, and it's got your fills down here. It's got your cash balance over here. So if you click on something like platinum and you go to, this is a daily chart on platinum, and then if you go to a 5-minute chart on platinum, you can see today it had two big sell-offs throughout the day. It actually had this nice recovery, and then it had a sell-off again. And anytime I see these big drops where like platinum falls or any of these metals, like you should be like aware if, silver falls 50 cents out of nowhere, if gold falls 20, 30, $40, you could kind of see there's these patterns where like if gold fell 20 to $40 right now, I'd probably say either the Fed made an emergency rate hike or, there's these peace talks that are going on over in Russia, Ukraine. So you can start reading kind of the tone and the temperature of the markets here. If you go back to platinum though, and you see these on the 5-minute chart on platinum, those couple sell-offs that I was identifying. And then also, actually, if you look at palladium as well, kind of did a similar thing. So we get to platinum. Here's palladium. Palladium's a little bit more sketchy because it doesn't trade as frequently. And it had that sell-off. It was like right in this area here. It sold off quite a bit. It was almost $100. And then before that, the pre-trading is not too active on palladium at the moment. But the story that came out, and it was a headline story that was like, they want to take electric vehicles and they want like 80% of all the cars out there electric vehicles by like 2030 instead of like 2040 or 2050 when they're expecting some big shift like that. I don't know if they'll get it. I'd be reluctant to give up my gas car anytime soon. So, but when you get that kind of headline, what it specifically does is it's going to jar the platinum market, because the first question you got to ask yourself is, do electric vehicles use platinum? So you just go to Google, put it in there, and of course all this data and everything has been filtered out by somebody. But you look at palladium and it says palladium has no place in electric vehicles. As the world shifts EVs, the demand for palladium may fall gradually in the years to come. However, the metal is used in hybrid vehicles. So, but if you go to a fully electric vehicle, you're not going to have any palladium in there. If you look at here, you look at do electric cars need platinum or palladium? It says industry experts have claimed for 20 years more than 30 million electric cars be in use. And it says self-driving electric vehicles that are battery charged do not incorporate platinum or palladium among their components. So you got to imagine if you see those headlines, people, they sell off their platinum and palladium. You go to, this is like an older story, and it's just some random one. I just put platinum in there and click, search the news and stuff. And it says that, the rise of electric cars is expected to heavily impact the platinum market for years to come. So auto industry is the largest consumer of platinum, 40% of the total demand of the metal. It's in the catalytic converters, which is used to, reduce emissions and things like that. So problem for platinum is it isn't required in electric vehicles. So you get these headlines that come out, and that's the reason for you get these sell-offs. Now, you got to also know the other side is that, Russia's a major player in platinum. And if this war escalates, which we do think it is, it's just you know, I don't want to get all into that, but you know, we think that he's going to try and go full force until May 9th when they have some celebration, and then that's when he could announce that they liberated part of it. So expect this to go on for the rest of the month. Now, looking at a few other things here, a couple of the other markets, the U.S. equities markets, and I got to tell you, it's really easy. This is slightly off topic, but a lot of people ask me about the platform. So say I'm just going to make a new page, and people get intimidated by these platforms, but I'm telling you, you can make this thing so easy. You just go and click blue line quote board, bam, there it is. Everything comes up. Then you're going to want to click this tab, and you're going to select what kind of chart do you want. You want a candlestick chart. You just drag it over. It puts it side by side. We can crunch this up a little bit here. Then you just change these things to blue, and bam, you have the two are linked up right here. This defaults to a 60-minute chart. I'll make it a daily chart for you so it's nice and easy. So looking at the S&P 500, January was terrible. That's when they start realizing that they are definitely raising rates and things like that. Fed gets extra hawkish. Everyone liquidates out of their positions here. So that was the big sell-off that we saw in some of the narrative right out the gate, that growth is beginning to slow. Fed's going to tighten rates into it. You get a little bit of a bounce back. That was probably just some short covering, things like that. Then you get the chasers. You got volatility exploding in the markets. You know, one of the things that I usually have on my thing is ADX, measures the strength of the trend. Then I'll add on there, I'll also add average true range. So click that one. And then the average true range, that gives you kind of a degree of volatility. So if you look when we were selling off right here, this average true range on the day was starting to explode. I mean, you had 130-point moves in the S&P. Even on a mini S&P, that's a lot of money. That's, you know, $8,000 a contract. So that's why most people were trading the micro contracts now. So going back to, you know, back to where we're at here on this. Let's see, bring this down. And you know, you look at this bounce that we had right here. This bounce on the S&P, what that is that's specifically Russia, Ukraine, peace talks, and then also the chasers. Now that we've gone up, you're starting to see kind of average true range is starting to come down. Volatility is tightening up just a little bit. If volatility picks back up, you're going to see a panic. If this all of a sudden starts turning back up and S&P breaks this level, breaks any one of these two, it's going to signal another lower high, and then we could really splat and go down pretty quickly. So we're looking at that on the NASDAQ, the S&P, and really the one that you should be watching is the Russell, because the Russell by no means looks bullish at all. So it is actually failed again, and it's taken out these previous lows. So if this extends at all, you're going to see the acceleration on the equity market sell back off. Remember, something is likely to give, and there's a combination of the tightening policy, the slowing growth, and you have disinflation going on here and somewhat deflation in the markets. And if people don't believe me, you look at, you know, things like crude oil, big lower high. You go to copper. That's not really a good example here. Oh, on the copper market, they are launching a mini copper from the CME. Looks awesome. Can't wait to trade it. I think it's going to be a good product for people. Copper is 25,000 pounds right now. This will take it to I think it's a 25,000 pound contract. It might be either a 10th or a fifth the size. I'm not sure. You have to look at it. So it'll either be 25,000 or a 50,000 pound contract, which make it a lot easier for people to trade. You look at some of the grains, they're signaling some lower highs. We're still mildly bullish on those, but you know, other markets, lean hogs falling off. You could go to some of the other markets out there like lumber, that's been signaling lower highs. Most of the energy is signaling lower highs. U.S. equities, I think it's going to be a big lower high, and then we're going to sell off from here. Getting into your gold. So I know you guys are like, shut up about these other markets, focus on the metals. So on gold, we've been buying. I have a lot of people that are long, like right around 1910, and then 1890 was that second low. We went to the June contract. So you can see that's where we bought. I think this was the big peace talk day where things were really selling off. Silver fell $1.50, I think, on the day, and that's when gold got crushed. So we built some positions in there on the long side. What we think is going to happen is that as the economic data comes out and it confirms that we are slowing down, the Fed, the number of interest rate hikes will go from 9, 8, 7, 6, whatever. But they're going to be really hawkish because they know they only got one shot at this at the get-go. So if you look at the one of the Fed guys came out today, he said we might even need to be more hawkish out the gate. That's what really put the pressure on reverse gold and silver here today. One thing you got to look is if you look at recession, just Googling it, putting it in the news, you're going to see that a lot of headlines are coming out on recession. And when the yield curve inverts and you tighten into a slowing economy, that's when you get that. So just looking at like the first story, I clicked on it, and New York Times. I don't know what to say about that. This whole article might be jeopardized, but you're going to see that they're going to say rapid inflation, soaring oil prices, global instability has led to lower their estimates of economic growth this year and raise the probability of outright contraction. So in here, William Dudley, former president of Federal Reserve Bank of New York, called a recession virtually inevitable. So this is the New York Times writing this. You think that they would be backing up old man Joe here with some positive stuff. So even with CNN covering the story, Deutsche Bank, first big bank to forecast a recession. So see what that one looks like. But I probably got a video and everything on it. But their fight against inflation will spark a recession in the United States that begins late next year. So I think this is going to come quicker. You're going to see the unemployment data. It's going to tick back up. Like unemployment rate, it's at its low. It's going to tick back up, and a lot of things are going to happen. So back on sticking back to the metals and everything. You look at gold. We did rise into a key resistance 1944.70. Here's on that gold chart. That was probably the high right here, pretty close to it. And then 1954, that's that other high that you got to keep a look at. This is the Morning Express. You could always get a 2-week free trial of it. Silver, it was like 25.10 is where we ran into resistance. I saw them start to break it down once they got quite hawkish. So we're going to wait for those support levels before we start adding again. And really, we're right here right now. I'm really waiting for kind of these ones right here. I don't see this unless something really changes big time. But, and then the same thing on silver. Right here, we're probably going to start adding again, 24.55 down to 24. I think this is more psychological pocket support. I think we end up coming in between here, and that's where we start to turn back up. So a couple other things want to point out. I always go to this Forex Factory. You could filter it out and everything. They do have, you look at the economic data that's come out recently, you'll see like highlighting GDP. That's that sell-off right there. Or I'm sorry, we came in lower than expected. You get this uptick in the unemployment claims. Let's see, there's probably some other things out here that were some big misses. Non-farm employment change, okay, that was well below the estimates, 492. We came out at 431. I was on vacation last week, so I was trying my hardest not to pay attention to it. You go to trade balance data, bigger than expected, factory orders in line. Oh, here's your PMI. That came out a little bit weaker. That was today. That's what shot gold and silver up initially, was that weakness there. And then we got the Fed minutes coming out tomorrow, and expect them to be really hawkish on there. That's at least what I would believe. Something you guys might want to look at, Federal Reserve Bank of Atlanta. This is their GDP now. It's forecast model that they have. They've got this thing ticking up, but I just don't see it. I think that this is the trend that we started here in the last few weeks, and I think it's going to keep going down. And then what will end up happening is those number of interest rates will come down with it. So kind of a lengthy video, touch base on a lot of different things here. Remember, if you haven't registered, go to research, click free, click subscribe. You'll get a 2-week trial. We'll probably give you a phone call here. Make sure you're at least getting the research. Sometimes people subscribe to it and they don't get it. It gets caught in their spam filter, and they like that we point that out. Or at least give them a courtesy call. So remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading. Send me an email, reach out to me. I love to hear from you guys. So we all have the same thought process on the metals and everything and equities. So I like hearing the collaborative ideas. It's always great. Thanks a lot. Take care. Bye-bye.